everybody, welcome to the TraderMerlin show. Let me get my camera on here for everybody. Hope you had a great session out there. Clearly my day was pretty darn good. We'll talk about that as we progress a little bit more through today's session. Some of you who were along today probably got a little blindsided by that action today. Some pretty big gap downs and then just kept on falling and falling. Begs the question, are we going to see more of this? Is this the beginning of the end? You guys might recall last week we were talking about how there was actually, I forgot who it was, but somebody on this show was asking about buying some puts or shorting the Dow, and we're like, it might be a little bit too early. Of course, that individual right now, if they're still holding in hindsight, is looking at us going, I was right. Well, I had some puts on there as well. I still am holding, just so you guys know, I'm holding my puts on the Qs and the SPY still. The target for me was actually first week of October. I wanted to let all of September end and then go through it, and that will still allow me to get out with about 60 days worth of expiration on those options. So still doing okay with regards to the options side of things, but we'll talk about that as we progress. So let's talk about what on earth was happening out there. It looks like a picture like this, little Monday market crash. A lot of people just staring at these portfolios. The numbers are pretty much red the entire session. Of course, right near the end, we did see it bounce a little bit, right? You had a nice little pop-up at the end. And as you can see right now, we're just kind of stuck sideways in the Nasdaq futures. But all in all, when I zoom out here and go to, let's say, a 15-minute time frame, pretty ugly, pretty darn ugly action today. And of course, most of that happening on the heels of one major event. And I'll go to the viewer question here, which will set up that conversation. I was wondering if you could explain how the Evergrande problem in China and how it can affect our markets, housing, and stock here in the U.S. Well, it can affect everything. It's basically, if you look back at what happened to our markets in 2008, early 2009 with our housing crisis, or really a financial crisis. You look at what happened with Lehman Brothers. Lehman Brothers was over leveraged. They just, for many other things, but over leveraging was a big problem for Bear Stearns and Lehman Brothers, and it came back to bite them in the butt. Now, that uncertainty of a systemic failure with regards to our financial system is what caused those markets to absolutely implode. Watching those things drop over 50% in a rather short period of time was probably scary to many. I was excited because I was short at that time as well. So luckily I timed that one pretty good. I was a little late on my entry back in 2008, but still managed to get some nice profits on the way down. So the question about what Evergrande is going to do, or what could happen to them, is there's a belief that could cause systemic failures within China. And again, lots of Chinese investors have been buying their bonds, right? Thinking that this is the place to buy and I'm safe here, et cetera, et cetera. If Evergrande defaults on that, then all of a sudden you're left with a major systemic problem in China. Not that the average retail person in China is loaded with money, but if they do have money, they're trying to invest it in their Chinese companies. And if this one defaults, that could really implode their whole market over there. So I don't think this is anything to be overly concerned about. I know it sounds crazy to say. You have a company that has over $300 billion in debt. Now, it's actually more than that. I'll show you here the financials in a second. But if it's really just this one company and the Chinese regulators have already been on top of them and saying, hey, listen, you got to rein it in here. You got to reduce your debt a little bit. They will probably bail out Evergrande, would be my guess. China can't let it happen. They cannot let this company implode. If they do, then my short positions are going to have a 10x rate of return here in no time, because that will create a whole degree of uncertainty in our financial markets, because if that goes down, then what other companies in China are going to go down, and what other companies have been buying the or lending debt, or creating debt and lending these companies money. And if that happens and they default, that's just lost capital. So it could be really, really bad. Could be a systemic collapse on one extremist side, absolute systemic failure for China. On the other side, not that big of a deal. I think we would all agree, if we had one company in the United States that had that sort of issue that was too big to fail, and it got into a situation like this where it looked like its collapse was imminent to destroying our markets, the government would come in and bail it out. Hell, our government comes and bails out companies that don't even need to be bailed out just because they want to make sure our markets keep going up. So I think what you'll have in Oscar says 300 billion is manageable. Well, let me show you a little bit further there, because this is one of those things where, how often have you guys heard me say, the trend is your friend into the bend at the end, or go with the trend? And people always ask, well, what do you think of this stock? What do you think of that stock? Well, here is Evergrande's share price. Let me just scroll up here so you guys can see the ticker symbol. China Evergrande, I don't know how you want to pronounce it. There's their stock price, right? And this is going back just into 2017. They were up over 30 bucks. Hello, if you ask me from 2020 on what to do with this thing, look at it. The trend is your friend. I mean, this is one that I invariably would get somebody's question. If I was in China, if we were a Chinese show, I'm sure people would be like, is now the time to buy? Is now the time to buy? Is now the time to buy? It's like, no. The trend is down, man. Until this thing reverses and they get bailed out, I wouldn't touch Evergrande for anything out there. But, you know, if you were buying the security, you were catching that falling knife and not really for any good reason. So I don't like this one, but here's where it kind of threw me, and I'm not a big fundamental person. I just don't trust the fundamentals, especially on anything coming from China. But we can actually go out here and click on financials, and then I can go to their balance sheet, and you'll notice under debt, the industry is reporting that they have $300 billion worth of debt. I'm noticing $800 billion worth of total debt, which would be substantially more than $300 billion worth of debt. So that's where they stand right now. Who knows if it's 300 or 600 or 800. You guys can see there's net debt, total debt, and 300 billion for debt. Bottom line is they're in bad shape right now. So that's that. Sorry, there's somebody coming to my door to trim my trees right now. That ought to be interesting. But yeah, I agree with Scott. China is not, in bold letters, exclamation point, capitalized, not going to let that happen. They can't. It will be just way too dramatic. Now, that said, if you think of a perfect storm for our financial markets, there's a couple different things to look at. Number one, how timely is it to have a major, one of the top economies in the world, all of a sudden have this huge risk component, right? Yes, they'll probably fix it. Everything will probably be okay just in that one. But all of a sudden you flip over to us, and what do we have? We have major issues with our debt ceiling. Last week, you heard Janet Yellen saying we have to raise that debt ceiling or there's going to be some systemic problems and it could be devastating. If you tie all these pieces together and you look at what's going on right now, we have an extremely polarized political office, Democrats and Republicans, basically just saying, well, I think this guy's blue, and one will say, I think this guy's red, and then they argue that it's green. They just want to argue with each other. I don't see any partisan effort there whatsoever. Maybe a couple different members, but most of it's just, I hate you, you hate me, let's call it a day. If you look at what they're fighting over right now, they're trying to come to some agreement on the infrastructure bill, right? That still is going back and forth, back and forth. And now you layer onto that another level of uncertainty, which is the debt ceiling. Obviously, the Democrats want to let the, I love these days as Paul says, yeah, it just makes it much more exciting when we have this type of action, right? But I'm looking, the China thing is one thing. Great, I love it because I have 50 puts on, 55 puts on the S&P and Nasdaq right now. But I'm looking at the U.S. as potentially be even more damaging. And the reason I think that that's more damaging is if all of a sudden you can get a situation where the Republicans are stalling and the Democrats are trying to get something pushed through, you may see something happen. The Republicans have pretty much already said, hey, look, we're not going to vote to raise the debt ceiling, but you guys already have the vote, so just do it anyway. Right? So they're kind of conceding things there. If it doesn't happen, if there's any issues there, then the U.S. is even, to me, it's even more important for our economy that we raise that debt ceiling. We got to increase spending. If we can't keep spending, we can't keep our markets doing what they have been doing, which I'm saying that on the high level as someone who's just saying, let's look at the markets. As a citizen, I don't think we should be spending as much as we are, and we need to curtail our reckless spending that's been going on forever and ever. But you have that domino effect, right? A debt issue with a major corporation in China, that could have ripple effects to their economy. That creates a little knee-jerk fear reaction here. Then all of a sudden, we look at it like, oh, we got to raise the debt ceiling. If somebody else comes into the equation and saying, no, we're not going to raise, what sort of systemic problems do we have? Remember, the last time that we were downgraded on our debt from AAA to AA+, may not seem like that big of a deal. In the credit world, it's massive to go from AAA, which is, call it risk-free, all the way down to AA+. Last time that happened was in 2011. So it's been quite some time since it happened. And that was a pretty major piece. It really, made America not look so good. I don't think it'll happen again. But again, I am not I'm not on Capitol Hill. I'm not a voting member of the Senate or House of Representatives or anything like that. It's just, stepping back and looking at the big picture, I think that one of the main reasons that you guys have heard me talk so much about building short positions and kind of buying these puts intermittently when I see the opportunity is I think the writing is just on the wall for it's more likely things are going to go down than continue to go up at this accelerated rate. It feels like we've gotten way ahead of ourselves with regards to earnings and spending and stimulus and just global economies. And you look around, it's like, wait a minute, things really aren't that great. The valuations are much higher than expected. So I think a sell-off is in order. The question is, what's the magnitude? So let's take a look at today's markets and see what we can glean from that. I'll run through our top 7 here. Walter says, imagine if Evergrande fails and we get no raise of the debt roof. If that happens, I will have 100x rate of return on my options by October. If that happens. But it won't happen. It won't happen. They're going to bail them out. They can't let it happen, you know? You just can't let it happen. You know, and here's a horrible example. But it's like knowing that your kid's doing something really stupid, right? So let's say your kid is you're in a big building that's under construction. You're on the 30th floor, and your kid's playing right on the edge, and there's no window. They're still in construction. And he leans out. Are you gonna let him fall? No. You're gonna reach out and you're gonna grab his hand. You're gonna pull him in. You're gonna probably give him a little spanking and say, "Don't you ever do that again, because you are going to fall to your death." Well, I think that's the same thing China's going to do to their situation. They'll grab Evergrande by the hand, give him a little spank, and say, "You better not do that again. You almost made us look really dumb in front of all our friends in the global community." So it ain't going to happen, guys. There's no way they're going to let that fall apart. I mean, look, my short position right now says I hope they do let it fall apart, but it won't happen. So here is our top 7 markets. Yeah, I see I got some questions coming through. I'll get to those as we progress. Noam says, how do you measure market sentiment? With VIX, well, I measure market sentiment by price. So that move today, you could just see the panic all day long. And when we get to the, I'll start at the worst, because you guys might think that, Nasdaq down 2%, same with the Russell, that's the worst. No, crypto getting hammered as well today. You saw it down double digits pretty much across the board. I actually bought some more today, bought about $5,000 worth. So not a big purchase, but just a little bit extra. But we'll start with the worst, which is Bitcoin. Here's part of the reason why I like it. You had that huge candle come right down today. It's bouncing off the 50-period moving average, bouncing off the 200-period moving average. That's a pretty strong buy point, even though it's not sitting at an area of demand, right? If I look over here to the left, I'm not seeing anything strong from a demand perspective, which would be my number one criteria. But I do know the psychological behaviors of how people treat price when it comes down to a long-term moving average, like a 50 or a 200. And here, conveniently, they converge on what is considered a golden cross. Remember, we talked about that last week. Golden cross is really a very positive sign for whatever instrument it is. In this case, just happens to be Bitcoin. Now, you might not be thinking it's much of a golden cross after it was down over 10% today at one point. Now you're down about 8.55% on Bitcoin. So pretty ugly, and I'll show you here. You look at the crypto space. You've got a whole bunch of these guys just getting absolutely butchered. Algorand down 14%, Polkadot down 15%, and I bought some Polkadot today. You got EOS Link, everything down double digits. Pretty darn ugly out there. So hopefully, 1 second here. Okay. All right, so let me continue on here. Unfortunately, Edison decided to show up right now to go out in my backyard and cut some trees down that are hitting power lines. So I apologize if you guys hear chainsaws, and hopefully no screaming and yelling out there, as my dog's probably going to try to attack these fools. Okay, let me continue on. So we go from Bitcoin, crawl up that ladder, not much of a jump, but went to the Russell 2000. And, nobody really talked about the Russell 2000. Why? Well, it was down 2.5%, but where are we? We're in the yellow box. We should just make t-shirts that says, "I'm the Russell, I'm in the yellow box." I mean, it's going to be a year that this thing just goes sideways and stays in that yellow box. Now, as it gets closer to this lower band, well, that might be something of interest. Now, what's noteworthy here, as you guys can see, we did rip down from the 50, and we broke down below the 200. There is one thing in this, but I want everyone to kind of pay attention to, which I personally think is really important. You notice this 50-period moving average. I know it's a trend, right? It's a dynamic trend. And so for those who don't know what moving averages are, maybe I can do a special again today with moving averages, or another day with moving averages, but it's basically saying what's the sentiment over time. In this case, on this line that I'm rubbing my cursor on right now, it's saying over the last 50 bars worth of data, since this is a daily chart. And it's been sloping down. And we talked about that a while back on how for some of these markets that are still moving up, the moving averages are still pointing up. Until those roll over, you don't really kind of feel the internals changing or the dynamics of the long-term trend changing. Well, with the Russell, it's trending down. So this is definitely a negative piece for the Russell. That said, it's still to me just a spread trade and trade the range in between 2090 and 2350. That's pretty much it. Now, let's go up that ladder. This is the one that I was excited about. We had a nice bounce, and when we were on Friday's show, you guys remember we talked about it, said, you know, we closed Friday pretty close to that demand line, right around 15,261 is kind of where I had the bottom of it mapped out. We ripped through that, and I said, if we break it, we're going to come right back down to the yellow box for a little bit. Well, we came not only into the yellow box, but down to the lows of it. So very important. I was actually anticipating there being a bounce. When you have this kind of huge downward move, you would expect there to be a bounce near the end of the day. The question is going to be, what sort of calming is done by the global community overnight on this? What's the talk track around Evergrande? And then as we slowly start to shift later in the week, what's the talk track around the U.S. debt ceiling? Debt ceiling and rates, I mean, these are all important things coming up here. But right now, very bearish for today. Doesn't mean it's out of the woods. We did close below the 50-period moving average. And you can see that today's action, it didn't really curve it down, but it flattened the 50-period moving average. It's funny how 2 days worth of trading have pretty much stopped an upward trend in the 50-period moving average and caused it to go sideways. So more continuation of this, and you'll get that 50-period to curl over. We could potentially break down below these lows, which I mentioned was about 14,770 on the NQs. If that happens, then I think I might actually be adding to my short position with put options. I wasn't planning on adding more. I was kind of content with what I have. You know, for those that were wondering, today's action, just a move like this, these put options ended up having like a 75% gain today when at the low. When the Nasdaq was down about almost 3%, this thing was actually it was down over 3%, just barely. It was up over 75% on these options, so pretty impressive to see it happen in one day. But you know, that's kind of, I didn't expect all this to happen in one day. I'm hoping we can follow through. All right, moving up the ladder, you've got the Nasdaq, which obviously I'm happy that was a worse performer because that's where I got some put options. I don't have anything in the Dow, but the Dow looks worse, doesn't it? We broke below these lows from the 19th and 20th of July. So you tiptoed below it, you bounced up, you do have the 50-period moving average rolling over, so this is starting to look bearish too. And that's a change of pace really over the past 2 weeks because it's been one that's been making pretty much higher highs and higher lows since certainly the 2020 lows, but pretty interesting dynamic here with the way that this has been moving. I think we will actually come down and test these lows, which would put us right at the 20 or 200 period moving average. Sweet. Stock Traders Almanac has the whole week being bearish. Well, Thomasina, I hope that you're right. Let's hope that you're right. Let's see, my SP puts. Let me go. My S&P. Oh God, I want to say 425. I think that's why I have this line drawn here. It is 425 is where my puts are at, which is crazy to think I'm just about to be in the money here, right? When I bought those, they were deep out of the money. I really did not expect it to drift that far that fast. Granted, I bought these. I started buying about a week and a half ago, added some last week. So, you know, during this little sell-off here as we broke some lows, I added a little bit. But no, I won't be adding any more. If we get below this 420 mark, then I'll probably buy some more because then I think this market's broken and we're going to head down much, much more. Let's just think about it. Even if we got down to the 200 period moving average on SPY, you know, this would go from a break. The original break of the 50 period moving average was 443. If we get down near this 200 period moving average, that's 410. Well, that's a huge drop. That's about a 40% drop, or it's not 40% drop. Excuse me, 35 to 40 point drop on this. That's a 10% decline in the S&P. I'll take it. I'll take it with a pretty, a nice size put. Not huge. I don't have a huge put position, but pretty decent. We are in 30. I'm in 30 S&P and 25 Nasdaq with regards to my puts. All right, let's see. Keep going. We got the Dow. We got crude oil, which had a little bit of a pullback today. We rallied up. I didn't think we'd get above the 50 period moving average. You guys remember when we were hitting that one? I was like, I feel like we're just drifting down. Well, it popped, shot close to getting a little bit higher up towards this moving average here at the top, or to the supply zone near the top. Now we're selling off and coming back down towards this 50 period moving average. So I expect crude oil to stall here near that 50 period moving average. And if we do, then that would bode well for Brendan, who is the bullish guy of the group, thinking that this might actually move to the upside. So we'll wait on crude oil, but to me, that's not the big story. It's the indexes. Here's your Nasdaq looking great as a nice break down below. You can see this this line drawn on the chart. I don't know who drew that. That's just closing price right now at 43.43. I think you'll probably end up challenging the 42.50 mark here over the next week. Probably this week we'll challenge those lows. Now, what happens once we get there and break it? I don't know. Not quite sure myself what I'll do at that point, but we'll reevaluate. My assumption would be this, guys. We'll sell off aggressively. We'll probably hit this 42.50 mark. Then we'll bounce up. So I'm thinking I'll take some off the table at 42.50, play the bounce, and then buy some more puts if we do, in fact, start to bounce there. Okay. Let's see. And then number one, gold. All right, so here's your GC. Gold, not a huge pop today, but at least something was up 0.76%. I did get executed on silver, so I have 2,600 shares of silver right now. Oops, not. If silver falls to 19 cents, I'm in trouble. SLV. So there's silver, obviously going the opposite direction. This one's not good. I'll put my stop loss down below 20 on SLV for that position I have, and I really didn't want to get stopped out of this one. I actually think silver is poised for a bounce, but the trend is just wrong, right? We've had gap downs, and just looking weaker and weaker and weaker, and moving averages are trending down on the 50 and 200. So I'm going against the grain heavily on this silver trade right now, and it's right at this line, this demand line. So I may actually bail earlier. I'm going to see what happens tomorrow on it, but not comfortable on my silver trade right now, unfortunately. All right, so that brings us through the our top 7. Now let me go back through. I got a whole bunch of questions. What gave you the incentive to start short position 2 weeks ago? It was initially started with some hesitation in the overall market. And you go back here, a lot of mine is just gut. You know, we initially had, I forgot which one it was. I think I shorted both the S&P and the Nasdaq, but got stopped out of the Nasdaq. And then as soon as we did this, we started to kind of drift back down. I put another line here right across those lows from, let's call it August 31st through September 9th. You can see these lows right here. So that's where I started, just put a few on, getting some skin in the game, letting it kind of fall in my favor. And then I added a few more the next week, just kind of scaling into it. S&P was somewhat similar. This one I already had some, but did not get stopped out. I had to stop above 45.50, and then added some as we started to break down to those lows. So that's pretty much it. Very simple. Let's see, what else do I have? Why would the big guys buy the last hour if they think the market is going to dump tomorrow? Well, it's not a question if they think the market's going to dump tomorrow. They think the market's going to get saved. They think that China's going to bail them out, and we'll probably have another huge spike to the moon, you know? It's normal for people to bargain hunt at the end of the day. Wow, I'm all pixelated today. It's normal for people to, when you have a really sharp decline, and today is one of the sharper declines we've had in months, right? Yeah, we had one back at the end of July, which was somewhat similar to what we have today, almost to the date. We had a similar sell-off, and you know, normally when you have those types of trading phenomenons, people look at it and go, "Oh wow, it's on sale. It's a deal right now. It's on sale," and they were right. You know, it was on sale. It was a pretty aggressive sell-off, and it's so gut and saw some hesitation. Yeah, and I just got stopped out of a previous short, so I was still had that one on the S&P, and I was like, okay, my gut just tells me this thing is long overdue for a big crash, and I'm getting stopped out along the way. It's fine. It's it's interesting because just the gains today. Just today, not even including the last week or so, which were positive, but just the gains today erased like the last 5 times I've tried to short overall and put me back in a positive territory. So, yeah, I'm interested in buying commodities. I really, like I said, I'm kind of surprised what happened with silver. I kind of wish silver would have done a little bit better move to the upside. Let's see, what else do we have? Yes, we're happy about the polka dot, aren't we? Even though it's down big today, I'm good with it. I'll buy some more. Tomorrow in the Crypto Investor Live program, we're going to be doing something. You guys, if you're trading at all right now in crypto space, you realize how obnoxious these fees are. I mean, they're like, it's insane what Ethereum fees are. So there's ways you can get around that using parachains and off chains and layer 2 technologies, which will be kind of the focus point. But a lot of stuff I'm not even trying to make trades with Ethereum products because the fees are just way too high. All right, let's see. The bond market's not showing too much concern right now. What does that say about the actual correction of the market in the near term? Well, I don't think that it's the U.S. bond market that's the one that's going to freak out right now, right? I think what the Chinese issue with Evergrande is not only that they have this behemoth of a company that is potentially a default on their debt. I think when someone issues debt, it's not like one person buys it, right? Unless you're the U.S. and you just get the Treasury to buy everything. You get the Fed to buy everything that the Treasury creates. In a situation like that, I'm thinking when Coinbase just issued a bunch of bonds, right? They were supposed to do $1.5 billion worth of bonds. They ended up selling $2 billion. They had $8 billion worth of demand. I mean, huge demand for this product. Who was that, right? Was that JP Morgan? Was it Apple buying Coinbase's debt? I don't know. But you know that there was a lot of other big companies going in there. And if I'm a major corporation, let's say I'm Simon Property Group, right? I'm a major mall type business in the U.S., but I want to have some skin in their game and maybe get some nice yield on their bonds. Maybe I go out and I buy Evergrande's debt, some of it, and I buy, let's say, $500,000 worth or a couple $1 million worth. If they default, bond payers get paid first. So that's kind of important to know, that if you have bondholders and you have stockholders, bondholders will get paid first in any sort of bankruptcy court or liquidation of assets. Usually it's the stockholders which don't get anything at the end, and that's why usually the rates of return for stock overall historically have been higher than bonds, because you're getting more risk. Meaning, if there is this default from Evergrande, if you're a shareholder, you're probably not getting anything, nothing. If you're a bondholder, you might get pennies on your dollar back, right? If they liquidate these assets and there's actually, in fact, enough assets there to cover the debt. So, kind of a strange situation. I don't think that it really ties to our markets yet. I think that's why the discussion of the debt ceiling to me is more important. I can show you what happened with the yields. They really didn't move much today. Here's your dailies of the 30-year yield and the 10-year yield. No big deal, right? This is our state-owned debt is obviously, our government debt is much safer than, let's say, corporate debt. What you're dealing with Evergrande is corporate debt, and all of a sudden somebody realizing, hey, these guys have way too much debt and they can't even make their debt payments to us. That's where the big problem arises. Let's see, what else? I'm looking for question marks. What do you think this will do to the U.S.? So, Paul, I don't know if you're new here or not, but if you have a question that you want me to answer directly, just type question marks before it. It's like, 3 or 4 question marks, and then send it on. That way I know it's directed at me, not just the group chat. But Paul says, what do you think this will do to the U.S. dollar? Well, let's take a peek at the dollar. Again, what do you think this is going to do? To me, personally, this makes the dollar more attractive, right? Because you want to be holding yuan, where these bonds from Evergrande are denominated in. If this does implode, which again, I'm in the camp that says it will not implode. I'm in the camp that says the government will bail them out. But if it does, what is that going to do to people's confidence in the yuan? They're not going to want to hold that thing. It's going to be trash. Because they're going to have to do what? They're going to have to print a whole bunch more, create a whole bunch more, just to help bail out Evergrande. So you're looking at China devaluing their currency again, and all of a sudden you have the U.S. looks like the prettiest one in the parlor. So that could really act as a catalyst for this dollar move to the upside, which is fine. I mean, okay, great. Up, down, or sideways doesn't really matter. I mean, we can start to formulate, I guess, overall trading plans with regards to the markets based off of what this dollar does. For those that aren't familiar with it, rising dollar, and I have this 94 mark on the Dixie. We get above 94, that's going to put downward pressure on the equity markets. It will make things look worse for the equity markets. It's not going to really be a huge benefactor for commodities either. U.S. will stay the world reserve currency, but it will hyperinflate. And that's the big question, Brendan, is where is this hyperinflation? I'm not discounting what you say. I agree with you. It's just, where the hell is it? How do we go from $4 trillion to over $19 trillion now in a year and a half and not feel inflation punching us like a Mike Tyson punch, right? I mean, it should be just kind of punch if you increase your money supply that much. It's just not there. It just seems really odd to me. It's like, is what I was taught at university wrong? Oh, that's a discussion for another day. Maybe I'll bring my professors on. We'll do a Zoom call with all my old professors and say, let's talk about monetary policy and fiscal policy, shall we? I think you guys were wrong in what you told me. Anyway. So the other thing to notice here on the dollar index, going back to the Paul's comment, I think it's going to add strength to the dollar, surprisingly, just because it makes us look more stable. This questions all of Chinese stability with regards to this one big company. I know it sounds weird to think one company can have that big of an impact. I think we're a little bit more diluted with regards to our corporations and having massive corporations. Yes, they have some very big ones, but I think we're a little bit more diverse financially than China is with their investments in their market. So either way, I think that this will probably continue this dollar to the upside. I'll be paying more attention as we get closer to 94. Granted, we're 75 ticks away from that right now, but that could happen very soon. If we do hear that China is, playing hardball with Evergrande and going to let them suffer a little bit, then this dollar is really going to have a little bit of a spike, and I think we'll get above 94. Awesome. Tom, you're funny. It's the cups are cheaper, but you can still drink as unlimited as you want. It's funny. There's how they discourage you from drinking a lot at different restaurants is they give you these really small cups. So they'll sell you a soda, and you look at it and you're like, man, this is a shot glass. I go to a poke place over in Irvine, and they used to have like tall water cups, right? Can I get a water cup? It's free. Now the water cups, it's like a double shot. Like taking 2 shots out of your local bar. That's their water glass. And I'm just like, man, this isn't even worth my time. And they know they're doing it on purpose because they don't want you to keep coming back in. They know you're just going to buy a soda. They're incentivizing you to buy something else. But yes, you can drink as much coffee as you want there. Get all jittered up. Shinobi, did Kraken crash the last time crypto plunged? Not to my knowledge. I was on them today. Everything seemed to be working fine. I think I saw you comment today that Kraken was having issues. I didn't see any on my end. Yeah, next time just DM me and I'll jump on my Kraken and see if we can see it live. But I didn't see any issues. Maybe it's different. I don't know. It could be that there's different data feeds because I know Shinobi, you're in the UK. That might be as well, right? I'm the US based thing. Maybe it could be interesting to see if there's lags with regards to data that I'm getting versus data that you're getting. That I've seen as well on different platforms. So for example, back in the late 90s, we had a variety of different trading platforms. We had one called Executioner. We had one called On-Site Trading. We had one called Cyber Trader. There were 3 other ones. I can't remember all the names. Come on, Merlin. Anyway, we had 3 or 4 different platforms, and we could line up people right next to each other, all connecting with T1 lines, because that was the best you could get back in the late 90s. Line them all up and have 4 different quotes on the market. And it was interesting because you'd identify, okay, well, which one's leading? Because if that one's leading, that's the one I want to be trading on. Or this is the lead account. And so that's what we pretty much did. Cyber Trader at the time was the fastest, had the best data. That's what we used. And, maybe just going from one location here in Southern California, let's say to the UK, you might be getting completely different data. One thing that I would encourage everybody to do, I know it's gotten a lot better over the years, is you can do something called a trace route. A trace route will show you how many hops you are going through to get to your destination through your ISP. And what was really interesting back in the late 90s, we had this one lady who was like, I'm not getting, my data seems way off, etc. There was like 30 different hops, and it went literally from, I'm making up the hops now, but it was like, it went from Orange County to San Francisco to Seattle to London to Hong Kong, back to Seattle to Texas, back to Germany, and then back to Irvine. I was like, wait, why do I have to go through all these hops? And it's just the way the ISPs were set up, internet service providers were set up back then. I'm hoping it's a lot better now, but trace routes can tell you, what are all the stops that you're making to get your data? And then you can also see how latent or how slow your data feed might be. Most of the time it's going to be nanoseconds, but sometimes you could get some lengthy delays depending on who your internet provider is. All right, cool. Let me keep going down here. Merle, is this another head and shoulders on Bitcoin chart? Hope I am wrong this time. Well, I would hope that you're wrong too. I wouldn't call this a head and shoulders pattern. Let me bring that chart up for you guys. So this to me is not a head and shoulders pattern. Let me get rid of those moving averages because they're just my eyeballs drawn right to them. Okay, take those moving averages off. Not a head and shoulders on the big picture. You could potentially make the argument that this right here would be. All right, let me draw it in. You could make the argument that looks rather head and shoulder-ish, right? You've got the left shoulder, the head, and then came back down the neckline of the right shoulder. That could be, everything works until it doesn't. And if that's the case, that would give us a profit target on Bitcoin, or a loss target, I guess, on Bitcoin if it broke and closed below that line of roughly 33,000. Honestly, if it dropped to 33,000, that still wouldn't be the end of the world. I think that's still, I mean, look at the big picture overall. If it got to 33,000, I'll buy a bunch more. I'll buy a few more Bitcoin and continue adding the portfolio. But it could. I mean, right now you're really starting to see a little bit of weakness, which is disturbing because I really thought we'd see this next leg up. And right now, no. It does look like it's getting weaker here, especially with today's trading action. I'd like to see what happens over the next 48 hours. Give me a couple days to let the little shock from this latest sell-off dissipate. But, we could definitely drift back down. I mean, look what happened back here in April, right? We went from 65,000, we drifted all the way down to 29, 50%. Yeah, I agree with Brendan that Bitcoin's a strong buy, but again, it depends on what your time horizon is. Could Bitcoin drop to 30,000? Absolutely, guys. It's not far-fetched at all to think that this could drop to 30,000. Now, I think that there's too many big players in this space now to let this one go that low. I just think that time is going to be the savior here of Bitcoin, meaning the longer we go, the more likely prices are going to be moving up for Bitcoin, but there will be some wild fluctuations along the way. Shinobi said, I'll take some of those at 33. Yeah, definitely. Let's see what else we got. Apes together strong. New trader and old OT. Hey, good to see you, Arkin. Welcome to the program. Interesting how Euro will react when the German secretary leaves. Well, I mean, look, anytime you have somebody new, it creates uncertainty, right? You get that volatility of a known structure. So, for example, right, if you have, and that's the same thing with going from Trump to Biden or from, whoever we're going from, whatever president you switch to. If that president's administration is there for any amount of time, you know what they do. You know kind of how they act, how they operate, what's their buzzwords, what's their catchphrases, what they're going to do for the stock market or the bond market. You get that sense of what they're going to do, how they're going to support the economy, or if they're a tough stance on it. When somebody new comes in, it's like, okay, now we have to take a step back and regroup. And that uncertainty isn't always bad, right? It just means you're going to have probably pronounced volatility in the euro for a little while because of that, right? I think that as you get a changing of the guard in Germany, you're going to have a lot more opinions about the euro. Should they stay in the euro? There's been a talk track multiple times over the years about Germany leaving the euro. Now, if that happened, I don't know if the hope for the euro surviving would be very good. I would take the bet that over the next decade or so, that the euro would just kind of dissolve, and that would be if Germany left. I don't see them doing that, but you never know. Peter, they could leave. I mean, they've been holding up most of the European community for quite some time. So, yeah, the changing of the guard certainly will create some volatility. When we start to get in there, when we start to see those changes happen, at least the bigger level people, the German secretary, but we start to see chancellors change, then you're really looking at some big changes. And we'll be watching that with some of the Forex guys here as we go. I have to move my paycheck day. The crypto market rings, it crashes 2 days before I pay myself. Yeah, you might want to pay yourself early. Well, the good news is, Chris, you're the boss. Hey, you know what? I'm going to give myself a bonus today. Here's a $50,000 bonus. Yep, I agree with you. No, Germany is the euro. And it's no offense to the Italians or the French or the Spaniards. You guys are all the euro. But, you look at who carries the preponderance of the weight, it's the Germans. It's funny. I think I told you guys this before. When I moved to Italy in 2001, I started doing some teaching here and there. I was teaching for banks and brokerages, mainly on the institutional side. So here's how you use the software, and here's what direct access trading looks like and how it functions. And I was interviewed by a Spanish newspaper when I taught a class in Spain. And they said, what are your thoughts on the euro? And I said, from what perspective? And the guy says, well, what do you mean? I said, well, as a tourist, I love the euro. Because before I felt like James Bond, right? I'm not kidding. I had a small little accordion file with each different currency. Oh, I'm going to Germany. Okay, I got my Deutschmarks. I'm going to Italy. I got my lira. Okay, I'm going here. I got my guilders. I mean, it was nuts having all these different currencies to literally go next door. Like you go into Switzerland to go skiing. It's like, oh, I got to have my Swiss currency. It was great as a tourist because now I have one currency. It makes it easy. And I said, as a citizen, I would be very upset with the euro. Now, it makes it nice because you can increase tourism. It makes it easier for tourists. But you know what? Having lived in Italy, having traveled extensively through Greece, and having lived in Germany, the German work ethic is very strong. It's aggressive almost. Work. The Italians, and no offense to my Italian friends here, but Italians, they like to live life. I enjoy the scenery. I'm gonna go on a vacation. Hey, I want a cigarette and a coffee. Yeah, I'm gonna go outside. I mean, they were much more laid back with their work environment. And then the Greeks are like, I just want to sit on the beach and eat dolmas, right? I mean, they were just chilled out. It wasn't this hardcore work ethic. So when you bring in a combination of countries, all with one currency, you've got one group that's working their butts off, the other one who works, but hey, they like to take it easy, and the other one's like permanent vacation. And that's across the board. I mean, you got all these different countries with different interests. It was a great experience, but yeah, I don't know how well it will do in the long run. Let's see. What else do I got here? German people are smart and Holland are both hard. Yeah, I love the Dutch. I think the Dutch, personally, I think they have a little bit more zest for our enjoyment of life. The Germans seem really strict. I'm German, so I can say that. I'm allowed to make fun of myself. And Italian calls strikes over life. Yes, Italians are, they're beautiful. They're great people, man. Merlin or Brendan, do you hold any Cosmos? I do not have any Atom at the moment. It's a thought. I need to broaden my portfolio a little bit with those types of ones, but I don't own any at this moment. All right, let me go into another question. We talked a lot about the evergreen thing. This was a question that came in from Les, who I think is still here. Les, good to have you with us, my friend. He says, looking at percent held by institutions and short interest, how might this help us with trading? Will it move less or more on the news and events when more of it is held by institutions? Okay. This is a great question, actually, Les. So there's two different things. Number one is percent held by institutions. And you can find that on things like Yahoo. Let's see if I can find out here. So let's go. See if I can show this to you. I'm just at Yahoo Finance. We're not going to click on that one. Let's type in a major U.S. company. Let's go Microsoft. There's Mr. Softy, as Mike loves to call it. And then I go to holders, and you can see right here, 71% of Microsoft shares are held by institutions. That's awesome, right? That's pretty big. And why is that important? Well, to answer Les's question, if something is not held by institutions, it's garbage. I know it sounds such a blanket statement, but if no institutions are holding a stock, that automatically tells you there's not value there, because institutions have connections way deeper than you and me. So if something has no institutional ownership, leave it alone. You're gambling with it, right? A lot of penny stocks, no institutional ownership. Why? Because they're gambles, they're junk, they're trash. If it has heavy institutional ownership, I actually like that better, because usually institutions react the same. They have the same basic philosophy with regards to price. And if they go and buy and sell, you can see their footprints easier, which means that supply and demand seems to apply better on ones that have high institutional ownership, at least from my perspective. So I actually like when they have high institutional involvement. If there's none, that should just be a clear sign, right? If the experts, the best of the best with, the smartest brains in the world out of college are going straight into these companies like Goldman Sachs and Merrill Lynch and going to their quant department, if they're not willing to buy any of it, then you shouldn't either. Second one was short interest. So short interest is interesting. Short interest is natural. For those who don't know, short interest really means what percentage of the shares outstanding are shorted. And if you have a real high number, that means that there's obviously very bearish sentiment. And the higher it gets, usually like 10 to 12 is just fine. 10 to 12, it's not that big a deal. That's just people speculating. But when you get to where you had GameStop had, I believe the number was 140% of shares short. That's a problem. You should never be able to short more shares than are publicly available. There are some out there right now that have like 30 or 40% short. That's pretty high. Now, the higher that number gets, the more likely you'll get a short squeeze. So to set that stage again, if you have, let's say 50, right? 50% of the shares short. That means that half of the existing shares out there are shorted, meaning people are betting it's going to go down. So if you get a small pop in price, those people who are short immediately are getting hurt. They might get stopped out. They might get conditional orders triggered, and all of a sudden things get slammed to the upside, and you can get short squeezes, which where kind of Reddit and Wall Street Bets have made the headlines, is really finding these things and short squeezing them. So you can find filters. You can go out to a bunch of different websites. I actually like FinViz. It doesn't tell you exactly their short interest unless you pay. But if you go to FinViz and go to their screener, you'll see right here it says float short. And you can go over 30%. So every one of these companies right here, there's 27 companies that have over 30% of their shares are short. And, you know, some of these might look like great potential short squeezes. Some of these probably will be short squeezed because of some, you know, Reddit user group. So I'll give an example. Let me put this over here, and I'll just type in a couple of them, and I can give you at least somewhat of a clue. I'll go to, let's say, a weekly, just so we can see the bigger picture. And we already looked at these, I think. Some SDC, so Smile Club. Right, Smile Club has a huge short interest right now. It's at least 30, might even be more than that. But, you know, came right into a double bottom formation, bounced out of that. Okay, maybe this is a potential buy. I don't really like the lack of history, but it's fine. IVC, right? So this obviously most likely has increased their short holdings tremendously over just the past couple of weeks here because of the way this thing's been drifting down. But you're also coming into some areas of demand, maybe. NPCE. All right, so this is one. I love stuff like this because a lot of people go, oh, wow, you got to buy this one because it's all-time lows. Well, no. I would leave this one alone at all costs. I wouldn't try to short squeeze this one until it got incredibly low. Now, we could use this in conjunction with some series of fundamentals, you know, going and looking at book value and things like that. I think 40 to 60 is getting real high. I think 40 to 60 is pretty dangerous. What would be the lowest percent for any institutional stock that you would consider? Yeah. Oh, I'm sorry. I read the question wrong. Yeah, I would say at least half. Got to be 50. And if you run through some of these big names, guys, you know, you can pick pretty much any stock. They're going to be pretty high. And the reason for that is most of these are going to be held by mutual funds, and that's where the real holdings are at. Okay, so it's just one area to check on. So let's see what's SDS Labs. This is one I was in a long time ago. SDS, no, or SRSL, no. It's gone so long ago. I'm trying to think of penny stocks. I don't really trade penny stocks, so I wouldn't be able to tell you there. Expert to trash. It's better to be skilled on your own and learn from real pros. Like, oh, well, thank you. You know, I mean, yeah, and I don't even like the word expert. I think that when you put your label on yourself that calls yourself an expert or a pro, it brings in an air of cockiness, and usually that ends up being worse. So don't claim to be an expert. Just try to be the best that you can at what you do. And, you know, I make a lot of mistakes. The viewers here know that, right? You guys have seen me make tons of mistakes. It's okay. I have no problem. I'll own it. Let's see. Let's go to that symbol lookup. So Nawaf says VLDR. Let's check out VLDR. Why not? Velodyne Lidar. All right. So penny stock. I say penny stock because for me anything under $10 is a penny stock. But let's go look at holders. So not a lot. It still has some. Okay. This is scary to me. So there's a couple reasons I don't like this here because you have 16% are held by institutions. That's great. It means that there's some institutional involvement, but look at almost half of this is still held by insiders. That is a little suspect. When you have the insiders holding that much, it's still a little suspect. Yeah, you want there to be dispersed ownership and the ownership not centralized in the owners of it. That to me creates a little bit of a bias with regards to data and to me opens up for much more manipulation. So I'm not a big fan of that one. All right, let's see. Elon says don't mess with Lidar Technologies. Going to trust Elon on this one. Well, I you know, one thing I've learned about Elon is, while I love him, I think he's brilliant, don't trust him. You got to take his tweets and things like that with a grain of salt because he's probably trying to benefit himself on many of these things. But yeah, I just looking at the price of it at $6.80, the limited institutional involvement as well as the heavy private involvement, I'd leave it alone personally. But and I guess the most important thing is, what was it, VLDR? Most important thing is, what's price telling us? So VLDR. Anybody want to touch that? I mean, did we not just look at a company that looks exactly like this? What was that company? Yeah, it was that China one. China one. That Chinese Evergrande looks just like this. So yeah, leave it alone. I don't see a reason why you'd want to jump on that one yet. Now, in the future that may change, but right now, nope. Bob Dunding and SS on Twitter. Good for him. Yeah, some of the stuff that old Mr. SS has been saying about Bob, that guy deserves to get his bell rung. I gotta see what Bob's doing. Oh, Mr. Dunn. All right, guys, that is, I think, pretty much it. Let me show you what's happening for tomorrow. So here is your economic calendar for tomorrow, the 21st of September. Really not tremendous news, although we do have housing starts and building permits for the U.S., which is of interest. If you look at later on in the day, you've got Japanese policy rate. So it's a rate announcement that's tentative. And right now, negative 0.1. That's where it's been at forever. Doubt that's going to change anytime in the future. Earnings today, you had Lennar report earnings. They beat earnings and sold off. Tomorrow is a little bit better. You've got Adobe, Aurora Cannabis, old ACB. We've been watching that one kind of. Was popular for a while, but now all of a sudden it seems to flatline right around $6 on Aurora Cannabis. You also have FedEx reporting tomorrow. FedEx has had a pretty tough go of it the past couple of weeks, but still looking real strong. And then AutoZone down here near the bottom. That's kind of it for tomorrow's earnings and economic calendar. All right, I realize how late we are here. We're just about to wrap up. So again, thank you guys to... Sam Sadden qualifies as an expert? No, Sam Sadden does not qualify as an expert. Sorry. Nope. Not an expert in my book. Ask him any question. If you guys, I know some of you guys are in his room and in his group and work with him. Ask him anytime. Hey, can you tell me anything about the markets other than supply and demand, you one-trick pony? Anyway, that's going to do it for today, everybody. I will have Bill Addison on Wednesday, which I'm excited about. That might be a great conversation to tie into how this specific bond market might impact with another specific bond market like ours. So we'll have Bill Addis on Wednesday. Tuesday, I don't have a guest, so it'll just be me on the program. So again, feel free to send in your comments, questions, feedback. You got it there at TraderMerlin@gmail.com. Feel free to send those comments in. Usually you guys end up steering the way the show goes, so I appreciate that. That said, thanks so much. Let's see what happens on tomorrow's trading. I'm sure we'll have plenty to talk about. Take care, everybody. I'll see you tomorrow.